The following is an Investor Brand Network audio production via our audio press release solutions. As a multifaceted financial news and publishing company, Investor Brand Network utilizes its network of more than 5,000 distribution partners as well as other corporate communication tools to introduce public and private companies to a wide audience of investors, consumers, journalists, and the general public. Investor Brand Network's platform connects the investment community with companies that have great potential and a strong dedication to building shareholder value. The following audio press release may feature a client partner of Investor Brand Network. Investor Brand Network may have been compensated for the production of this audio production. Please be sure to read our entire disclaimer for full disclosure. NetworkNewsWire presents Gold surges past $4,200 as investors flock to producers with cash flow. A major sector rotation is beginning to unfold. After years of capital crowding into overvalued growth sectors such as technology and AI, investors are increasingly turning to real assets, specifically looking at producers and near producers in precious metals as the next destination for capital flows. What makes this moment unique is that gold and silver are reaching a new all-time highs, even as equity markets rally, creating a rare environment of rising hard asset values alongside broad market strength. While speculative exploration has long defined the junior mining space, a new class of companies is emerging, fully permitted projects on the cusp of production with tangible near-term cash flow potential. An example of this type of opportunity is ESGold Corporation, ESAU on Canadian Securities Exchange or ESAUF on OTCQB, which exemplifies the shift toward juniors that can deliver value now, not just promise tomorrow. ESGold is advancing two complementary projects. Its Montauban Gold-Silver Project in Quebec is under construction with production targeted for 2026. While in Colombia, the company is in the process of validating its Planta Magdalena joint venture, where historical data and early sampling suggest district-scale upside. This combination of cash flow potential and exploration optionality is rare among juniors that still trade at pre-production valuations, making ESGold an option worth considering among other precious mineral operators in space, including BHP Group Ltd, Barrick Mining Corporation, Agnico Eagle Mines Ltd, and Wheaton Precious Metals Corporation. At Montauban, ESGold's fully funded, fully permitted tailings processing is structured to begin generating cash flow before full-scale exploration ramps up. The company has a binding MOU with Planta Magdalena SAS in Colombia to jointly reprocess permitted gold and silver-rich tailings, now moving through validation phase. To support its dual-track strategy, ESGold has in place its critical financing and sales arrangement with Ocean Partners UK for the Montauban project. Multiple catalysts lie ahead as the company transitions from build-out to production. ESGold's dual-track approach, combining a low-capex, high-margin tailings production model with systematic exploration upside, is designed for replication across legacy districts in the Americas. Gold's defensive strength before downturns. Historically, gold has served as a safe haven during recessions and period of financial stress. Yet in this cycle, gold, and often silver, is rising before a downturn arrives, reflecting investor anticipation rather than reaction. The rotation toward safety is not retroactive. It's unfolding in real time, as more capital seeks stable, de-risked exposure. Because many investors are already hedging against inflation, debt, and instability, precious metals are poised to become one of the largest beneficiaries of global capital realignment. Juniors with production capability are especially attractive in this environment, offering both leverage to a rising metals price and the potential for cash flow even in volatile markets. Within the junior space, speculative explorers have long outnumbered real operators. But the new paradigm is different. Companies with high potential for success may be those with low capital intensity models, high margins, and the discipline to fund exploration from operating cash rather than constant dilution. These are the operators rewriting the traditional model. ESGold represents a clear evolution in that theme. The company is fully funded and permitted, advancing its Montauban project toward production while simultaneously validating its Colombian joint venture. Montauban's fully permitted tailings and remaining near-surface mineralization provide a clear path to near-term revenue. A few juniors reach this dual status: permitted, financed, diversified, while still trading with upside potential rather than execution risk. Cash flow first, discovery second. ESGold is not focused on speculative dreams alone. The company's strategy is rooted in delivering cash flow first, then expanding. At Montauban, its fully funded, fully permitted tailings processing is structured to begin generating revenue even before full-scale exploration ramps up. Tailings reprocessing is a low-risk, low-capex pathway to production. Because the material is already mined, the infrastructure burden is reduced, enabling earlier cash flows. ESGold's model aims to use those returns to partially or fully fund future exploration without continual capital raises. This means limited dilution moving forward and increased shareholder value over the long run. The company's partnership with Ocean Partners further reinforces this strategy. In a binding term sheet worth up to 9 million Canadian dollars, Ocean Partners will provide a prepayment and working capital facility to support Montauban's built-out and flowing gold-silver with offtake rights for 100 of doré output. The structure helps reduce dilution risk while aligning capital support with production. By putting operating margins and near-term production first, ESGold flips the conventional order in junior mining. Rather than exploration first, dilution second, it gives investors a tangible earnings foundation, then layers exploration and discovery potential on top. Validation in Colombia, the next growth chapter. In August 2025, ESGold announced a binding MOU with Planta Magdalena SAS in Bolivar, Colombia, to jointly reprocess permitted gold and silver-rich tailings. The goal? To expand its tailings to cash model to a new jurisdiction with historical precedent and exploration upside. The MOU provides ESGold with 50% joint venture interest for a 1.5 million Canadian dollars contribution and a first right of refusal on the remaining 50%. ESGold's technical team is already on the ground in Colombia, where initial sampling and bench-scale testing have confirmed strong gold recoveries. Further optimization and validation work are now underway to refine the process, confirm scalability, and advance due diligence and site logistics. Most recently, ESGold's geological and engineering team has mobilized the Planta Magdalena site to validate grade, tonnage, infrastructure, and processing parameters. Bench samples from both Colombia and Quebec have been sent to ALS Global for independent metallurgical analysis, with results from Montauban expected shortly following the recently announced positive findings from Colombia. The results will be critical in converting the MOU into a definitive JV and scaling operations. Bolivar's regional geology supports significant upside. The zone includes at least one mineralized corridor measuring 3.4 kilometers by 400 to 800 meters from historical reports, giving ESGold a strong foundation for systematic exploration once the JV is formalized. Fully funded and executed projects. To support its dual-track strategy, ESGold has in place its critical financing arrangement with Ocean Partners UK. The 9 million Canadian dollar facility is non-dilutive and tied directly to Montauban's production, with repayment through doré deliveries rather than equity issuance. Because this funding aligns with production, ESGold reduces reliance on share issuance and retains shareholder leverage. Moreover, the offtake agreement ensures Ocean Partners will purchase 100% of Montauban's gold and silver output, subject to delivery minimums of 50,000 ounces of gold and 1 million ounces of silver, providing certainty of demand for its production stream. The company's September 2025 update confirms Montauban is fully funded and construction is progressing toward a mid-Q4 2025 completion target of the building. With that in place, ESGold can simultaneously advance the Colombia validation program without external dilution. This financial and operational positioning gives the company optionality, stability, and execution capacity, rare traits in juniors evolving out of the exploration phase and toward real asset conversion. Near-term catalysts to watch. Multiple catalysts lie ahead as ESGold transitions from build to deliver. Bulk sample results from both Montauban and Planta Magdalena are currently in lab testing, with assays expecting in the coming weeks. These results will validate metallurgical recoveries and feed into final processing circuit design. Meanwhile, Montauban construction updates are expected regularly, culminating in the building completion by mid-Q4 2025. Each piece of infrastructure comes online, the project moves closer to its 2026 production goal. In Colombia, on-site validation, further due diligence, and exploration planning will follow the site visit by the geological and engineering team, with announcements anticipated through Q4 2025. The side-by-side updates in Quebec and Colombia should reinforce momentum and investor interest. Continuous news flow, from assay updates to construction milestones to JV agreements, will help maintain visibility and support valuation as ESGold proves its execution capabilities across jurisdictions. A scalable, clean mining model. ESGold's dual-track approach, combining a low capex, high-margin tailings production model with systematic exploration upside, is designed for replication across legacy districts in the Americas. This replicable framework aligns well with investor demand for sustainability, capital efficiency, and returns without dilution. By focusing first on tailings recovery, ESGold minimizes environmental disruption and capital intensity. Then, as cash flow builds, the company can fund exploration across its land packages or new acquisitions. This model is well suited for jurisdictions with established mining infrastructure. As the broader market continues to rotate into hard assets, the advantage will go to juniors that already have de-risked, funded, and scalable operating models. ESGold's combination of permitted projects, secured financing, and exploration optionality positions it as a flexible, modern junior poised to capture upside in this new cycle. The current capital rotation favors real assets, not speculative promises, and junior producers that can bridge the gap between exploration and production stand to benefit disproportionately. ESGold's strategy exemplifies this evolution. It is fully financed, fully permitted, and operating across 2 jurisdictions with near-term cash flow catalysts and long-term discovery potential.
This audio press release is an original broadcast provided by Investor Brand Network, a multifaceted financial news and publishing company that delivers a new generation of corporate communication solutions, including news aggregation and syndication, social communication, and brand awareness tools. Investor Brand Network may receive payments for the services and solutions provided to its client partners. You should assume that the owners, officers, and directors of Investor Brand Network or financial analysts mentioned in this audio production may hold a position in and may intend to trade the securities on their own accounts. This audio production is not an offer or recommendation to buy or sell any securities mentioned in this audio production. The information in this broadcast is presented solely for informative purposes and is not intended to be or should it be construed as investment advice. As in all investments, investment in the featured companies carries an investment risk. Listeners should review the companies thoroughly with a registered investment advisor or registered stockbroker. This audio production by Investor Brand Network is not purported to be a complete study of the featured company or other companies mentioned. Information used and statements of fact have been obtained from featured companies and other sources but not verified nor guaranteed by Investor Brand Network as to completeness or accuracy. Such information is subject to change without notice. Please see our full disclaimers and disclosures at investorbrandnetwork.com.